a probability-based computer software trading and technical analysis company philosophy, as I'm your most trusted source for blockchain technology and cryptocurrency breaking news and coin updates here on YouTube and in the cryptocurrency sphere. As that's right, old Vincenzo me has brought truth and most importantly integrity back into the trading market. And you can see real quick, Bitcoin's bounced up over that $39,712 support line, right? In this rising channel, and it's trying to bounce off of that, and now it's getting close to this 40. It's a descending 42,346 and 13 cent 200-day upper resistance, and that's your major area to watch, right? The same thing with the XRP. It's coming up to that 200-day, trying to back test once again this 80 cents uptrending upper resistance to make a run at this descending upper resistance way up here, major upper resistance at 86 cents today, slightly higher, 87 cents, right? And you see what's going on here, and all the crypto is in the same state of the industry. The gold and silver bullion market is consolidating down today, right? U.S. government 10-year treasury.
The first 10 years of this century, we have had three major crashes. In 2000 was the dot-com crash, followed.
You need to be taking note of this, and this is what I've been preaching, and somebody I've been following, Robert Kiyosaki, for over 10 years now, and has taught me so much, and you, the audience, needs to be paying attention to this.
By the 2006 real estate subprime crash, and then 2008, the banking crash. The question is this next? This is the giant crash of 1929, and every time I listen to those guys on CNBC, I call it bubble vision.
Bubble vision, or as I call it, paid propagandist for the corporate media, is nothing more than paid shills and fleece heisters and shysters and snake oil salesmen for the United States government, and they're paid by them to be a government propagandist machine to spiel nonsense and to push and move the herd of sheep into the direction that they desire, right?
I keep talking about the giant crash of 1929. I tell you what, it doesn't even compare to this one coming. So that's why I write and I speak, and I'm very concerned about our futures, our well-being, and the state of the economy.
But not long ago, I wrote that the best time to prepare for a crash is before a crash. The biggest.
He's absolutely right, and that's why Vincenzo's Gold Crypto Investing has been harping on you guys to invest in mining stocks, hedging against inflation with gold and silver bullion with part of your portfolio, and at least some of your portfolio in international dividend-paying stocks and the gold and silver bullion mining sector, because I think there's going to be 10 and 15 baggers along the way, and I think you're going to 10x your portfolio in it.
Actual world history is coming. That got a lot of news. That's big news. That is good. What I have is I've actually lived through history.
The S&P 500 is really the S&P 7, and it's being held up by Treasury Secretary Yellen.
And what Robert Kiyosaki means by that, it should be the 7, is there's 7 major stocks in there that hold up the whole market by weight, right? So if these 3 out of those 7 go up and the other 80% are going down, the index will still go up because they're so heavily weighted. And the few stocks that have been doing well, that these 2 communist scumbags that work for the Federal Reserve, and they're perpetrating themselves as people that care about the United States people, right? They're nothing more than fleece heisters and shysters. Janet Yellen on the left and Jerome Powell, the current Fed chairman, on the right, and the Treasury Secretary Yellen on the left. They're both scumbags, charlatans, fleece heisters and shysters, and paid propagandists for the United States government, by the United States government, to protect the criminal gangster cartel that has, like I've told you, infiltrated the trading market and infiltrated the United States government in order to rig the markets to knock down and beat down the retail trader. And these are 2 of the faces of the criminal gangsters.
So there's no correlation between the economy and what Yellen and Powell are doing. I said one more thing is that I'm a little strange in that I like crashes. So this next crash is going to be really, really good, but it'll bring down gold, silver, Bitcoin stocks. But the good news is a crash is a good time to get rich.
And that's where we're going to leave off with Robert Kiyosaki there. A crash is where all the people, the crash is nothing more than a transfer of wealth from the uneducated to the educated. What I mean by that is the uneducated buy a bunch of things in a bubble that they don't understand what's going on, and they just pay a top dollar for garbage, get in over their head in debt, but it's bad debt. They don't know how to cash flow it, and then they lose it all when the markets crash. And the educated that have been planning, sitting, and waiting, and strategically putting a plan together, and they start to execute it when there's a crisis. Because when there's a crisis, you get deflationary assets. Even if you get inflationary consumer prices, energy, and the rest of it, food, you'll get deflationary and real estate stocks. And the financial sector and the educated take their capital and their borrowing power and they pick up these assets at 10 to 20 cents on the dollar when the uneducated were buying these same assets 200 cents on the dollar, right? 300 cents on the dollar, because they're stupid. They're uneducated, right? And that's what we preach at Vincenzo's Gold Crypto Investing. Check him out. Check Robert Kiyosaki out. He's a great guy to learn and to get educated if you know nothing about it. Go to Rich Dad Poor Dad, right? This is where I go to get all my information from Robert Kiyosaki. He's over here at, it's funny, I can't find Rich Dad. Rich Dad Poor Dad. Fuck, come on. Why can't it just bring up his site? But just go to Robert Kiyosaki and it'll come up on his site, Rich Dad channel. That's what it is. Go follow him. That's somebody that I follow, the Rich Dad channel, right? Obviously, Peter Schiff, I follow. I would go to the Peter Schiff show, follow him. Mike Maloney and the Hidden Secrets of Money, very informative. It was, I believe, an 8 or 9 part, very long series. But Gold, Silver with Mike Maloney. Go to the Mike Maloney station, right, and follow him. He's a very good guy to follow, and you get a lot of valuable information off of that, right? So that's what's going on here. Series are at almost 3%. As you do know, Vincenzo has made an industry exclusive call last year when he came on to the YouTube trading sphere, and we had to go all the way out to the monthly, right? And you see Vincenzo said 10-year government bonds, and when we made this forecast, government bonds were last year in April way down here below that 1.5%, right? And Vincenzo made a bold call, and the bold call was 10-year government bonds have been manipulated since 1980 with interest rates, and hyperinflation started to take over. I expect prices to move up here on a huge move over the next couple of years, and that's 9.5% on the 10-year Treasury, way up at the top of this channel from 1981 when they started heavily manipulating interest rates back here, right? And this has a big doing what's going on in the crypto sphere, the housing market, the financials, and the rest of the real estate stocks and all of it. Anything in the financial market, this has a huge thing to do. And now you can see government bonds since old Vincenzo last April, May, it's June, February 2021, July, May. They were back down here at about $1.90. They're up 141%. 122% at current price and rising. And I do think you're going to hit that 9% coming soon. And as you can see, what we got going on here is you have major doings in the financials, right? Major doings in the financials. You can see the 30-year fixed rate mortgage in the United States. If we take a look back here at 1980, leading up into the leading up to the hyperinflation almost in a huge economic crisis and recession, you can see we're at 17% 30-year fixed rates. And then they started suppressing them after they raised them way up because we were in a massive recession and a massive deflationary period. So they crashed interest rates to manipulate the market. And you can see they crashed rates from 18, 19, 20% all the way down to about 8.5%. And then you can see in this little blue arrow, they started raising them, and that caused a recession, right? And then they lowered them because that's the playbook ever since 1980. You raise rates high in inflation, and then you crash them to try to manipulate the inflation down. And then as the economy slips into recession, you raise them, but every time you start to raise them, or when inflation starts getting too high, you try to raise rates to bring down the debt, but it causes a recession. You can see that's what happened in 1990. They raised them a little bit there in blue, then they suppressed them again. You can see this time they only got up to about 11%, and it caused the recession. Then they crashed them down to about 6.5%, and then just before 2000 in the tech bubble, they tried to raise them they raised interest rates for a couple of years. They got them up to about 8.5%. They had a big recession, so they started pre-lowering them leading into the recession, and they lowered them all the way down into the mid 90s in this blue area, down to about 5-6% for about 8 years, and that caused a massive housing market problem. And then they tried to raise them from the bottom slowly over about 6 years. And when they got up to about 7%, it caused a massive housing market, financial crisis, and almost a world, the greatest recession and depression since the Great Depression around the world. And then they lowered them again, and they got all the way down to almost 2%. And that caused the biggest housing market bubble in United States history. And now you can see anytime you get up near 4.5 to 5%, it's a big problem. And you have a recession. When you look back here, every time they try to raise them up, you have a recession, right? And when you were down here at 3.5% in 2019, when you're at 4 to 5%, when Trump was in office and they were raising rates, you had a repo market crash, right? And the housing bubble started to roll over and the stock market started to go down. So what did the Fed do? They manipulated the market again, and they started crashing interest rates leading into COVID. And COVID was the best thing that ever happened to them because it gave them the ability to unleash the printing presses again, right? And you can see then we got below 3 to 2.5, and that created from the COVID March 2020 all the way until the end of 2021. It caused the biggest housing market bubble in United States history, all-time record highs of $400,000 for the median price of a new home. Home supplies were at a record low, but now all of these are starting to change. You can see the average interest rate's over 5% now as of the last report, but now it's over 6%. And I think this is going to go to 10%. And you can see mortgage loans, United States, average rate, April 15th, 2022, 30-year fixed, 6.875%. 15 months ago, that was at 2.5%, right? And you say, well, what difference does that make? And here's where financial education is really going to make or break the wealthy versus the broke, right? Just look at what you got going on here, right? The 30-year fixed mortgage calculator. Just look at this. So say you take a loan out. Let's make it easy because I like easy math. Say you take a loan out for $200,000, right? You're at 6.875% in the state of Illinois, right? It's similar around the country. $1,314 a month for a $200,000 house that you're taking a loan out. 1,314 times 12 equals $15,000. Times 30 equals $473,000 for a $200,000 mortgage for 30 years at 6.875% minus $200,000. You paid an extra $273,040, not counting taxes and maintenance on that house. And people wonder why the American populace and the average American can never get above ground because people don't have that financial education of you take a $200,000 mortgage out, it's really costing you to pay back that mortgage an extra $273,000. That's 273% interest over 30 years cumulatively you're paying, right? That's why you can never get ahead. And this is only going to get much, much worse, right? Because look at the interest rates, right? And if you look at what's happened on the monthly home supply in the United States, and you can correlate that over with the interest rates, right? The lower the interest rates, the higher the home supply. The higher the interest rates, the lower the home supply, right? So if you look at anytime you get over 7 in the home supply, a housing market problem starts to happen, and then there's a recession, right? And anytime you're at 4 or 5, you're building up a bubble because there's usually artificially low interest rates in that same time frame that's artificially suppressing uh, the home supply by making buyers that shouldn't be buyers, but turning them into buyers at such cheap interest rates, right? And you can see in the 1960s, it was down for about 10 years in the home supply. And as soon as the home supply came back up, because they started raising interest rates, you had a big crash, right? You had a recession. Then the home supply crashed because they loosened monetary policy in the late 1970s, in the early 1970s, and you started building up a bubble again. And by the mid 1970s, you had a crash again, right? So then they eased policy in the late 1970s, going into the early 1980s, and you had a huge inflationary problem, and you had almost hyperinflation because they had too loose monetary policy. And then in red, and that's what these red areas are recessions, they tighten monetary policy, get rid of money and destroy it, and it rinse, washes, and repeats, right? Every time. And you can see during 2000, right, from 1990 to 2006, they artificially lowered interest rates so low for so long they caused at the time the biggest housing market crisis in United States history. And then in 2008, it all unraveled, and the Fed printed at an unprecedented rate to keep the economies afloat. And now it leads us to where we are today in an economic disaster. And you can see now the home supply went down artificially low during COVID to 3.5% when we had the lowest interest rates on housing in United States history. The buyers took advantage of it and they bought their new homes, but now the interest rates have tripled since then. You can see they were at 3.5% in October 2020. They're 100% higher than that now, but they're almost 200% higher than where they bottomed out at about 2.5%, right? Oh, this is the home supply, not the interest rates, right? So the home supply has doubled. The homes out there now for sale have doubled from 3.5 to 6.5% at I think it's 6.7% right now, and I think that's going over 10 in the next few months. And you can see just in a few brief areas, you can see this is the average United States price of a medium home, right? See that medium sale price of the United States sold in the U.S. And it was back below 20,000 back in the 1970s. But then you can see they started printing money with getting us off the gold standard in the late 60s. And you can see this little blip in the radar, steady up, little blip leads a recession. Then again in 1990, a little blip down leads to a recession. Then you can see in 2000, a little blip down leads to a recession. Then you can see a big blip down led to a major fucking financial crisis. And now if you look currently, have we peaked over the $410,000 mark for the average price of a new home, which is insane, right? You can see a little blip where that arrow is. It's starting to trend down. And if we zoom in now, you can see it trending down. The last quarter of 2021, and I'm sure in the first quarter of 2022, this is going to be down closer to the $395,000 level, and that's giving you an indication that maybe a recession's coming, right? And we're going to get in the next episode and look at 10-year treasuries, euro versus dollar, PPI, and why that's all important in the next episode of Vincenzo's Gold Crypto Investing. But that all plays in to what's going on in the coins. And if you look at the coins real quick as we wrap it up, you have to be paying attention to what's going on outside just the crypto sphere to give you that inside knowledge and the technical advantage over the market, right? So right now you got your upper resistance of 42,346 in Bitcoin. If we go to the 4-hour time frame, you got the 200-day moving average is where that is. You got your lower support down here uptrending on the current time frame at 39,865, right? And you got your major lower support at 36,000. Bitcoin or XRP, you're coming up to major overhead resistance at the symmetrical triangle. If you can get back into the symmetrical triangle, just like we were talking about back here, you can trade back up and maybe get to some upper resistance because you got till the end of May for this to actually have to break up or down out of this very long symmetrical triangle that's been going on over a year now. But I think it's going to break down at the end of this. And our summertime target and end of the year is down there at 19 cents in Bitcoin or XRP. And in Bitcoin, we have a big breakdown out of this consolidation, this bearish continuation pattern. And we think we're coming to $21,000 by the summer and a late 2022 target, 76.66% chance of happening of 13,336. Like, subscribe, and share to Vincenzo's Gold Crypto Investing. Peace and love. Peace and love.